Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about NOVOCURE LTD quarterly report. NOVOCURE Ltd. offers a range of businesses and services including development of tumor treating fields, TT fields, devices manufacture of TT fields, devices commercialization of TT fields devices for solid tumor cancers treatment clinical trials investigation for various types of cancer, including plus brain metastases plus gastric cancer plus glioblastoma plus liver cancer plus non-small cell lung cancer plus pancreatic cancer plus ovarian cancer. The company's TT fields devices include Optune Geo and Optune Lua. NOVOCURE Ltd.'s stock price drop. A complex mix of factors. NOVOCURE Ltd.'s stock price has plummeted by 20.83% in the past year due to a combination of factors that have weighed heavily on investor confidence. Mixed clinical trial results, particularly for non-small cell lung cancer, NSCLC, have been a significant concern. The company's commercial launch of Optune Lua for NSCLC has been slower than anticipated, leading to difficulties in gaining adoption and establishing reimbursement. Furthermore, NOVOCURE's widening net losses and profitability concerns have raised red flags among investors. Despite surpassing revenue estimates, the company's negative net profit margin and operating margin highlight ongoing challenges. Increased research and development expenses, sales and marketing costs, and inventory obsolescence charges have all contributed to these losses. Analyst downgrades and lowered price targets have also added to the stock's decline. The lack of significant news in mid-2025 led to investor uncertainty and a sell-off. While some positive developments, such as successful Phase 3 trial results for pancreatic cancer, were unable to counteract the broader concerns regarding profitability and product adoption. Ultimately, NOVOCURE's stock has consistently underperformed the market and its industry over various periods, reflecting investor disappointment with its growth trajectory and persistent unprofitability. The primary drivers of revenue growth for Optune Geo are primarily driven by the company's presence in key markets such as the US, Germany, France, and Japan. The Zai agreement with Zai Lab has also contributed significantly to revenue growth in Greater China. Additionally, FDA approval/clearance for Tumor Treating Fields device for pancreatic cancer indication has boosted revenue. On the other hand, the primary drivers of revenue decline are attributed to a decrease in cost of revenues and sales and marketing expenses. Net income and profit margins. A decline in performance. The financial performance of a company has taken a downturn, with net income experiencing a significant decline. For the 3 months ended September 30, 2025, net income decreased by 22% to -$37.3 million compared to the same period in 2024. This decrease is also reflected in the 9-month period, where net income dropped by $9,023 from -$102,705 in 2024 to -$111,728 in 2025. Profit margins have also suffered, with a gross profit margin decline of -4% to 73.2% for the 3 months ended September 30, 2025. However, operating income margin saw an increase of +0.6% to -23.6% for the 9-month period. The reasons behind these changes are unclear due to a lack of context and explanation in the provided data. The company's financial performance is a testament to its ability to generate positive operating cash flow. According to the financial summary, the net cash provided by operating activities stands at $123,000, indicating a significant increase in revenue over expenses. Furthermore, the absence of any mention of net cash used in operating activities suggests that the company has successfully managed its costs and is generating sufficient profits to cover its operational expenditures. This positive trend is a clear indication of the company's financial health and stability. The company's debt level has experienced significant changes in recent years. While short-term investments pledged to banks have increased by $12,696, long-term debt has seen a decrease of $14,055 due to the redemption of convertible notes. However, total debt has actually increased from $558,160 to $560,620. In terms of interest expenses, there are notable increases in accrued interest and interest paid. Accrued interest has risen from -$1,213 to $789, while interest paid has increased by $5,198 in year 3 and $2,780 in year 5 compared to the previous years. Additionally, higher interest expenses related to the senior secured credit facility have contributed to these increases. Overall, the company's debt level and interest expenses have undergone significant changes, with total debt increasing despite a decrease in long-term debt due to the redemption of convertible notes. Regional Performance Review, the company's financial summary, reveals a mixed bag of results across different regions and segments. On the positive side, Germany, France, and other international markets showed an impressive 8% increase in net revenue, with notable figures of $10.2 million and $15.9 million respectively. In contrast, the United States and Japan struggled to match this performance. The U.S. market experienced a relatively poor showing, while Optune Geo and Lua products underperformed. Additionally, the U.S. saw reduced revenue due to decreased one-time benefits for prior period claims. Japan's flat performance was also a concern, with its poor showing highlighted in multiple sections of the summary. Overall, these regional disparities highlight areas where the company needs to focus on improvement and growth strategies. Management's outlook and strategy. The company has a strong presence in key markets such as the U.S., Germany, France, Japan, and China through its license agreement with Zylab. To drive commercial adoption of Optune Geo and Optune Lua, management is advancing clinical and product development programs while expanding its international footprint through regulatory approvals and market launches. Management is committed to fulfilling lease and contractual commitments while managing investments by measuring them at fair value. The company must meet certain revenue thresholds or receive FDA approval for its Tumor Treating Fields device in pancreatic cancer indication to draw additional funds from the facility. Key priorities include prioritizing growth while maintaining financial health and flexibility, expanding access to Optune Lua, anticipating FDA approval for Optune Pax in pancreatic cancer by end of 2025, and exploring broader applicability of TT Fields therapy to solid tumor cancers. The company is well positioned to extend global commercialization rights into the future through partnerships and adapting to changes in the tariff landscape. Concerns about inventory buildup and supply chain disruption are evident in the financial summary. Inventory obsolescence provisions have resulted in significant expenses, including a $2.9 million expense for Optune Lua arrays in Q3 2025, which increased the cost of revenues per active patient by 16%. Additionally, efforts to mitigate supply chain risks through diversification of suppliers outside of Israel are underway, but have led to higher array costs due to new array rollouts and NSCLC launches. These issues highlight potential vulnerabilities in the company's inventory management and supply chain operations. That concludes the financial summary for NOVOCURE Ltd. Feel free to comment below, and I will be happy to answer them when possible.